The first scenario, for instance, let's talk about, is you're following a previous accountant. You're taking over for that accountant. And the first objective when we approach them is to create the chart of accounts. Now this might be very easy because they probably already have a working, functioning chart of accounts. If you're coming in as an employee, they might already have the accounting system in place. You're just kind of taking up maybe a locomotive running at 90 miles an hour and you might have to jump on there, okay? But you're probably going to use their chart of accounts. Now, on the other hand, you might look at the chart of accounts and say, or maybe the boss says, you know, the reason why you're taking this job is because we no longer have an accountant, and the reason why we don't have an accountant is because they were not setting up the accounting to meet our needs. So I need you to change it to fit our needs, of course, and then you're going to adjust the chart of accounts to meet the needs of the business owner. That's going to be less common. The most common is you're going to be able to come in and use the existing chart as it stands, maybe with minor adjustments. One of the problems that accountants do oftentimes is they choose one of the canned chart of accounts that is in the software. Now Peachtree does this, QuickBooks does this, Intact does this. I mean, they all have these standard chart of accounts that you can just take, in essence, pull off the shelf and start using. The problem with those chart of accounts is too often they are voluminous. You'll have more expenses in there than you will ever use. Okay, so sometimes companies will pull in those chart of accounts, and then when you're trying to figure out which account you want to use, you got this huge long list, you pick it out, and at the end of the year you look at these accounts and here's 50 different accounts and the average balance is $2.33 for each of them. Okay, do you have too many accounts if that be the case? Yeah, so then you'll want to delete a lot of those accounts and try to make them more useful to you. Now why? Just out of efficiency. Because as you know, when you're looking down the chart of accounts and you're trying to figure out which one, if you've got to go through a long list of them to get down to the account that you want, it just takes more time. So use it efficiently. On the other hand, if you see that the miscellaneous expense has the largest expense balance of any of the accounts, what does that say? You need more expense accounts. Give it more character, okay? So you need to find out what went into that miscellaneous expense and then create new accounts. So those are some of the small adjustments that you could make. But I will tell you, for the most part, when you're running into an account company where they had a previous account, you're going to be able to utilize their existing chart of accounts. So the next step then is to come up with the beginning balances, right? Now the beginning balances will typically be the balances that you received when you came in there. However, not always. Be cautious here because, again, there might be reasons why that accountant is no longer there. And certainly you don't want to pick up their dirty laundry, okay? Now, what do I mean by that? Let me give you an example. One of our students went into a business. This business was, they were firing their previous accounting firm because they just weren't getting the type of service that they wanted. They asked her to do it. Very typical process, okay? First thing she did was, as I'm going to tell you right now, she audited the books, okay? You always audit the books first. Now what does that mean? Check the asset and liability balances against an outside source, okay? And then look at the sales, cost, sales, and expenses. Look at their history and see if they seem fairly typical, okay, throughout that period. Well, she looked down the asset accounts and she sees some asset accounts with unusual names, names that she hadn't heard me talk about, okay, with sizable balances, $75,000, $80,000 in these accounts. Strange names, sizable balances. She calls me up. She says, Alan, you didn't tell me about these accounts, and I had her name them, okay? And I said, I didn't tell you about those accounts because I've never heard of those accounts before. They made no sense to me. They had personal names in them. They made no sense the way that they wrote them. So I said, you need to ask the owner what he knows. She went to the owner. Owner had seen them there, but never realized what they were, was intimidated or failed to ask in any event. So she went back to the previous accountant, which was a CPA firm. She said, hey, listen, what are these accounts? Their response was, we don't know. They were here 5 years ago when we got the company's accounts. Okay? So she went back to the previous CPA firm, which was one of the larger firms in town, asked them what it was. They did not know. The accountant that had done the books, shortly after this client had pulled off, had left the company. Okay? We don't know today why those balances existed. We don't know where they came from. We don't know what they mean. Now, there's a potential that there could have been some criminal processes going on. We don't know. The fact is, we will never know. Okay? They ended up writing them off. It was over $100,000 that they wrote off for this company. Don't do that same thing. Make sure that you always look at the books, the balances. Are they accurate? Are they correct before you start working on them? Okay? So that's the first step. We always audit. Then if it looks okay, if it passes the audit, then we're going to go ahead and set them up in, if we're doing it on a freelance basis, in our accounting system. And what we might do is make one journal entry, one general journal entry to set up beginning balances. We'll debit all the asset balances, credit all the liability balances, and so on and so on. Of course, the entry is going to balance if everything's in there, and we post it as of the last day of the previous month. So if we were making this entry for in this month, say in August, and the previous month was the books were done by another accountant, we would put it in our books as of a July 31st entry, okay? One entry for all that. Now, if it doesn't pass muster, if the account balances are way off, and we can adjust it easily, which you will run into as a freelancer, you will see that, unfortunately, very often. If that be the case, you're going to start over, and we're going to talk to you about it. That doesn't mean that you're going to go through and redo all the work. It just means we're going to come up with some clean numbers. Okay? I'm going to show you how to do that in just a few minutes. But recognize that your purpose is to make sure the numbers are as accurate as possible. Okay?